November was a bit of a rollercoaster of a month with lots of up and downs, even some unexpected events, like Meta wanting AI chips from Google instead of Nvidia. Bitcoin dropped a massive 19% with some big stakeholders pulling their money out. In this video, I'm going to show you exactly what affected my portfolio, but most importantly, what dividends I got paid this month. In November, I almost broke even. My portfolio dropped 0.5%. The S&P 500 had quite a similar month, but ended up in a positive 0.3%. Year to date, I'm still well ahead of my annual target of 14% and beating the S&P 500's 17.8%. Year to date, my portfolio has 25.7% gains. You can really see the power of reinvesting those dividends now. Let's break down the biggest winners and losers this month. The biggest winners were Amgen with 9.4%, Caterpillar with 9.9%, FedEx with 9.7%, SPDR Gold ETF with 7%, and Simon Property Group with 4.8%. And on the downside, Bitcoin with minus 19.4%, Dell with minus 18.2%, United Health Group with minus 10.4%, Omnicom Group with minus 10.1%, and Aurora Cannabis Incorporation with minus 9.6%. So, some surprises there. Bitcoin and Dell dropping quite a bit, but I also had some upswings in the other sectors. This shows the importance of having a diverse portfolio. The gold ETF has been a good investment in recent months for me, balancing the market's uncertainty. Now, let's talk about what I bought and sold. In November, I increased 6 positions. Here's the breakdown. As usual, 5% of my 536 monthly contribution went to a dollar cost averaging strategy for SPDR Gold ETF, resulting in buying 0.07 shares for $27. Using the same dollar cost averaging strategy for Bitcoin, I used another 5% of my monthly contribution, resulting in buying 20,000 Satoshis for $27. Next, I increased my position with Omnicom Group. I bought 1.67 shares for $121, bringing my total amount of owned shares to 10.9. Next, I increased my position with EOG Resources. I bought 1.14 shares for $121, bringing my total amount of owned shares to 6. Next, I increased my position with United Health Group. I bought 0.37 shares for $121. Bringing my total amount of owned shares to 2.57. And next, I increased my position with Dell. I bought 0.81 shares for $119, bringing my total amount of owned shares to 3.77. I didn't sell anything this month, and as a long-term investor, I very rarely sell anything. I prefer to add to my existing solid companies when the price is right. And the best part, dividends. In November, 9 companies paid me a total of $11.50. Okay, so not as much as the last few months, but it's still passive income. Let's check out who paid what. MasterCard with 7 cents, Bank of New York with 83 cents, American Express with 34 cents, Colgate with 15 cents. Caterpillar with 5 cents, CVS with $4.19, AbbVie with $3.96, Realty Income with 52 cents, and Hormel Foods with $1.39. It's important to notice that Realty Income is a monthly dividend, so I'm eager to increase this position when the price is right. Also, Homo Foods is one of my worst performing stocks, but as you can see it pays a good dividend. Although this isn't a reason to keep hold of an underperforming stock, even with dividend payments over time I could be losing wealth. Something to definitely keep an eye on. My portfolio dividend yield is currently at 2.61%, and that is expected to give me an annual income of around $190 and roughly $16 a month in passive income. So yeah, November was a bit of a roller coaster. In the middle of the month I noticed I was down by around 2.5%. Of course this isn't nice to see, but you have to remember the market does move both ways, and you need to mentally be ready for that. There has been some movement in the AI world recently, and that has upset the momentum temporarily. But I'm sure it won't take long until the AI world is firing on all cylinders again. Bitcoin took a bit of a hit. Silver and gold, they're doing well, and the dividend aristocrats are continuing on quite steadily. I keep dollar cost averaging, I keep reinvesting my dividends, and I stay focused on my $100,000 goal. That's how you win, not by chasing the market movements. So, the stock value checker spreadsheet I have been using hasn't been working as well as I hoped. There have been a couple of fundamentals that are missing, and I noticed that again this month it was suggesting that I put more money into Homo Foods. If you've been watching the previous monthly updates, you will know that Homo Foods has been losing money in my portfolio since the day I bought them. It was at this point I thought, no, I'm not going to put any more money into Homo Foods at the moment. So I did something I do not recommend doing, and it goes against my number one rule. I made an off-the-cuff decision. But this decision made me realise that I could have been previously missing an opportunity. For example, if I have a stock that on average I have paid $80 for, so the average of 3 separate purchases, but the current price is say $150, my 20% margin of safety of $150 would be $120. So technically I've got $40 worth of shares I could buy and still keep my 20% safety of margin. And these type of companies I'm talking about are the ones that are growing. They are dividend pays as well. So does this mean I've been missing out on potential growth? Of course, I can't just calculate it like that. I also need to know the true intrinsic value of these stocks. What are they worth? And then I can use both of these calculations to help me make my decisions. I think you can guess what I've been doing in November. Yes, I've been rebuilding my stock value calculator, and I'm excited to try it out in December. Thanks for watching, and if you found this update helpful, make sure you like and subscribe so you don't miss out on the exciting December update. How will my new spreadsheet perform? And here's the thing, I've noticed that 68% of those who watch regularly aren't subscribed to this channel. The best way you can support me for free is to like, subscribe and share with like-minded people.